Okay, so let's get started. My name is Pablo Ortiz from the FX Method. I've been lecturing for 5 years. I've been trading for 7.5 years. And it's recorded, yeah, the Friday webinar. The only thing is we have a crazy week. Some people already asked, and I'm not sure we will be able to put them online in our YouTube channel this week. It's going to be probably next week. We'll do our best. Have a huge lecture on Friday, and on Saturday a day course. Again, 12 hours long, and we are preparing for all of it. Plus, I have webinars with you guys today, Wednesday, and Thursday as well. We're participating in a course which is 12 hours long called Round the Clock Trading. It's in English, and 12 traders worldwide will lecture over 12 hours. So you're really invited. I'm going to give you the link later to participate. My lecture is going to be at 20 p.m. I tried to make it in the same schedule as I'm doing here, and we'll be talking about trading edge, that elusive concept, which means basically in that hour I'm going to explain around 8 to 10 different aspects on edge, which I didn't deliver, of course, in one mortgage as it was an introductory course. So today we're going to be talking about the Hill Climbing Algo. Just to get started, we have here Einstein again. The main thing is just if you are doing the same things over and over again and you expect different results in your trading, that's not going to happen. So my recommendation is you guys start at least with trading systems or with a trading method. Today we're going to be talking about this part of the pyramid. For the new guys, that's just our trading philosophy, this trading pyramid. Majority of traders start with technical analysis. 95% of traders start here, and 95% of traders are losers. So there is a correlation because of that. And what we recommend is that you start with trading systems, and if you can automate them, even better. That's with EAs in this case, if you're working with MetaTrader. This is the syllabus of what we will be talking today. I think I'm going to extend myself over 60 minutes because it's a lot to talk about. First of all, why optimize? Second, what is concretely manual optimization? What is the Hill Climbing Algo? How do we use it concretely? And we would be applying all of this knowledge to a very specific EA that some people already have, some people already funded their account, and some people don't. If you want to have the free EA, you have 3 options. You can open a $2,000 account with AxiTrader. You will get the 2 free A's and 2 free templates for manual trading systems that we're explaining. You can get a $10,000 offer. You will get additionally 31 pairs of historical data of a majority of them 14 years old. And if you want real hand-holding that we explain you everything in private tutorials, you open your $50,000 account. Okay, so let's get started. Why optimize? The thing is that you need to understand the more parameters you have in a trading system, the more combinations you have to find an optimum. So how does it look? Let's say, for example, I uploaded here my AxiTrader platform, which you should get downloaded very easily. I'm going to take off these charts because they are kind of confusing. They are for manual trading, and they don't serve much now. And what I do basically is I go here, View, Strategy Tester, which is the backtesting feature. And what I do, that's a bit my thing, I just drag it up here, and I leave only one pair visible. I don't need these lines either, because I'm not doing manual trading right now. I can just take them off. Or, yeah, I don't need that. The time frame I may need. Actually not, but... And I leave here just the pair I'm optimizing right now. So in case I'm watching other parts of the backtesting, and I forget I'm optimizing on the euro-dollar. So I please ask you to do the same steps if you have MetaTrader downloaded on another screen. Ideally, when you come to these webinars, you should be having in one screen the webinar, in another screen you should be having your MetaTrader and follow on what I'm doing. Anyway, this is being recorded actually twice today, just for security. Okay, and we'll be uploading the videos, but we are not very fast. We are really doing a lot of stuff here in the office, and we are not very responsive on uploading the videos, so you know, but they usually get uploaded. Normally in 1-2 days, this time 7 to 10 days they will be up. Okay, so once I've done it, first of all, I should have installed the free EA, which is called T2F. If you haven't installed it, it's very simple. You just go here, File, open data folder, MQL4, experts, and just drag and drop the EA here, which is a compiled EA. That's why the extension is EX4, which means it's an executable file. EX stands for exe, executable file, and 4 stands for MetaTrader 4. There is also the MetaTrader 5 version, which we are not dealing with for reasons that I can explain in another webinar. Okay, so you need to drag the EA here, close and reopen the platform, and then when you open here, you should see all the EAs. The C6 was based on the manual strategy that we checked last time, the VCB, volatility channel breakout strategy, and that's why we call it C, whatever. We just put letters. That is not necessarily very important to know, but every letter has a meaning, and in this case the robot is called T2, and this is what you guys should have in case you already opened the account and you came to the lecture, right? And you installed the EA and you opened your pendrive. So what happens is that this EA from factory, normally from factory, if you want the settings from factory, what you need to do is just press here on reset, right? You'll have the settings here on the second tab, input. You'll find the settings of the robot, okay? And here you'll have all the parameters that it has. It seems to be a very complex EA, but it's not. It's two EAs in one, which is 2 parts of code put together. We are just gonna take out one part, which is the trend system, which I'm gonna explain on Wednesday. And today we're gonna trade only with the scalping system, which is the first part of the robot. Hence, this part is going to be true, activated, and this part is going to be false, deactivated. Okay, the value is the actual parameter value you are having now. The start, step, and stop would be the parameter values if you're doing an optimization. An optimization is nothing else than many back tests. Okay, so if we do the first back test here, one lot is too much. I'm going to put probably for a 10,000 account, 0.13. I checked it already. And here are the parameters that we're going to study today. And the main thing is that if you would check or study, I'm just going to make a small test so you understand the whole theory that I'm going to explain now. Of all the parameters, you would try to cross them with each other. Let's say you would like to start with a stop loss of a, let's say, for instance, a logical stop loss is always more than 10 pips, right? So it should be from 10 pips stop loss till not more than 120. We don't trade more than 120. Actually, in scalping, it's already crazy. Let's say a TP of 4 pips till maximum 90 pips. A moving average from 2, because a moving average from 1 makes no sense, till 90. For scalping, that distance from the moving average from 0. I will explain this all later, right? But I'm just trying to show you what would happen if I would just search for all the possible parameters, right? Let me finish this one just real quick. And I would be studying this trading system on all these parameters. This is the losses that I accept, and the hours. It makes no sense to optimize beyond 24 hours, right? So I'm going to optimize it from 0 to 23 hours. If I would be studying all of it, and I wouldn't be doing the genetic algorithm, that means I would just cross all the parameters with each other, I would be getting a tremendous figure, which is actually uncalculatable. I would be getting, this is millions, right? This is billions, trillions, quadrillions, 6 quadrillions, if I'm not wrong, 6.7 quadrillions of combinations. So this is all the reason for this webinar. This is all the reason for optimization. And I would be waiting for, I don't know, 3 million hours, 600,000 hours, which is crazy, 44 minutes and so many seconds. and it's still calculating, so it's not certain it's going to be finished in 900,000 hours. 900,000 hours is more or less like 500 years. So it's totally unviable with a relatively simple system that has just 1, 2, 3, 4, 5, 6, 7, 10 parameters, and I missed one. With 10 parameters, it would take forever to find the optimum. So the more parameters you have in a trading system, the more combinations you have to find an optimum. That's the main thing you need to know, and that's why many books say that you shouldn't make trading systems that have more than 3 parameters, but that's completely wrong because it makes no money, not in Forex. The other thing you need to know is that there is not just one optimum. If you studied math and you remember polynomials, I don't know if you remember that, but basically this is, for example, a line, and you're looking for a solution here on the XY axis. If you remember that, just real quick, don't worry about math, but if you are checking for the cross here, you have just one solution on that formula, right, where it crosses the x-axis. So it gets more and more complex as the further you go, the more degrees of freedom it's called. It has, this is a parable, and here you have two solutions here, as you can see, and then it gets a bit more complex here, and on this type of graph you may have 3 solutions, as you can see here, 1, 2, and 3. So what it means, this formula, it's that if you have 12 degrees of freedom, or 11 as in our trading system, you will have at least 11 optimums. And this is a thing that people don't understand. They think for a trading system, if the trading system has 11 parameters, there is one solution. There is one optimum. And that's a huge mistake. They don't understand really about a mathematical branch which is called theory of optimization, or optimization theory, which is a whole branch of mathematics, and they don't understand about it, and they think if a trading system has 11 parameters, there's just one optimum, and they have to find the optimum. But that's not true. If you have 11 parameters, you may have at least 11, because on 10 parameters you have 10 solutions, so you could have 11 plus 10 plus 9 plus 8. You see my point? You could have at least around 120 solutions, and none of them is better than the other. And this is very important to understand. So when you have a complex or relatively complex system with 11 parameters, you can have at least 11 solutions, and there is not just one optimum. There's many optima, plural. Okay, so you will never find, the third point is very important, you will never find the absolute optimum in case it would be only one, which is not, because you would need to do all combinations. And even if you had high-speed computers, or you'd be working with machines like CUDA, they're called, or Tesla, and you'd be calculating every possible combination, which is a waste of time and money, actually, because we will see you can do it another way. That's why we are here today in the webinar, which is faster and more efficient. Then you will never get to this point. So you must be just humble and say, okay, I will take something that looks like an optimum, and I will not care if there is something better. Okay, so when you're searching for the settings for a trading system, you just find a good enough optimum. It's probably never the absolute optimum, and it's fair enough. And that's the last point here in the slide, and you'll be happy with that. And I'm going to explain you today what is fair enough, what is good enough, and just trade it. The main thing is that you start trading. Otherwise, you're going to be a great theoretician, and you will never trade with trading systems, automated trading systems. So if that's clear, I can continue to the next slide. Please write me here if you understood it, that when you're resolving a polynomial equation, you have at least as many solutions as there is degrees of freedom, and the degrees of freedom depend on the amount of parameters. Is that clear? So if you have just a very simple system, which is just a Bollinger Band, the period of the Bollinger Band, for example, and RSI, For example, the level of the RSI, the by and the cell level and the period of the RSI. This is 4 parameters. You would have at least 4 different solutions, not just one. And these people, many people don't get it. That's great. Some people understood and some people are silent as usual. So this brings us to the mathematical theory of optimums, which is very, very important. And if you make the paid education, we go very much in detail, because we will see now that the optimization is paramount for a good trader and to make good money. So we use algos, which is mathematical procedures. That's what an algorithm is, to get quick solutions. And these algos are called search algorithms, or search algos, just in short English. And search algos, these algorithms to find a solution, they are very different from the trading systems algorithms. So that's why I'm mixing both topics. If you were on Friday here, you got an algo for trading. You got a very concrete algorithm or procedure, mathematical procedure to find a trade, to exit a trade, to filter out a trade. That's a very different breed of cat, very different nature to the search algorithm. And now it gets more complex because we combine both algos. We combine the trading algorithm with the search algorithm. And this makes the thing very, very complex, because depending on the trading algorithm you have, and depending on how you use your search algorithm, even if in MetaTrader you cannot tweak the search algorithm, we'll talk about this, you get very different results. Okay, so how good is a search algo? It depends on if it really gets to good optimums. That's the first question you need to answer. Let's imagine we had the search algorithm of making just brute force, right? We will just combine everything with each other, and this would be our first algorithm, just combining everything with everything. I would say that's a very weak search algo, because it would take us so many hours, and in case we are doing this out of MetaTrader, some universities do brute force, it's called, and they have the machines for that. It's a waste of time in our case, because we don't have the resources, and it's a lot of power, a lot of electricity, so it's not a good algorithm. The speed here is very important. How fast can you get to a result? Comparatively, there is not a perfect speed. Of course, the perfect speed to find a solution is less than 1 second, but the reality is when you have a relatively complex system, like with 11 parameters, the trading system we made on, what was it, on Friday, had like 9 or 10 parameters at the end. It became a bit more complex, and it can be even more complex. I have it in around 20 parameters. I did it even a bit more complex. Then, of course, it will take more time to find the optimum. The more parameters you have, the more difficult it is to find the optimum, and also you need to know more about optimization to find a good optimum. So it's very, very important that a search algo, the last point, that it's not just a good mathematical solution, but that it's a very good solution to be traded. Because maybe you get a solution which is okay mathematically, which really gets you what you want in terms of solution, but it's not a very good result to be traded. So it's very, very important that you comply with these 3 things when we are talking about search algorithms. There is a vast amount of search algos. I've been working with at least 12. We made it ourselves. We coded. We have a lab, as you know. And I've been working with a particle swarm optimization. I call this the bird algo. This is like swarms of birds, how they fly. I worked with that a lot. I've done my own genetic algorithms. There is the ant colony algo. I have worked a little bit, not much with that one. Simulated annealing. There's a lot of search algos, and every one of those has its forces and deficiencies. And we've done a lot of work. I've been working with search algos over 2.5 years, actually, extensively, and researching them with trading systems I know, just to see the force of the search algos. If they really brought me to a result faster, and which was more tradable. So in MT4, we have only 2 possible algorithms. Well, actually 3. We can just combine everything with everything, which is absurd, right? Even if you have a very simple trading system like the moving average or the MACD sample that comes with the platform, it will take you forever to combine all the possible combinations. So I don't count that search algorithms. And we have only two, the genetic algorithm, which comes by default with MetaTrader, and what I will explain you today, which is called the Hill Climbing algorithm, that you do manually. Okay, and both have their weaknesses and strengths, and they're also very dependent on the algo that you are, the trading system that you are optimizing. So we come now to the point where a trading system without a good optimization is practically of lesser value. What I gave you on Friday has some value, of course. It's a robust trading system, but you need the other part, which is the parameters. How do I trade the volatility channel breakout on which pair? Because obviously for Australian New Zealand to Australian Swissy to cable to whatever, I don't know, there's a lot of pairs you can trade it on. If you don't have the parameters, you have only half of the game, so to say. So the thing is that we will see that because people optimize the wrong way, a lot of people leave a lot of money on the table. There has been no trading system that I've taken from a third party and I've optimized, or my students have optimized, that we got not more than 100%, not less than 100% net profit additional with the same risk levels. That means that I've seen over 1,000 trading systems in the last 7.5 years, and that means that no single trading system I didn't find additional money. I always doubled the results in backtest, minimally doubled. Sometimes I got 500 times more. So I was quite surprised. I thought, what's the difference? Well, I studied mathematical physics, yeah, but there's no point in that, right? Many people have mathematical background or whatever, and what I found out is that programmers are very bad optimizers. They are good with coding, but they're very bad with this branch of mathematics, or whatever you may call it, of trading, of automated trading, which is optimizing. So I focus very strongly on optimization because I understood there's a lot of money on the table to be left, and I never understood it. I mean, take whatever commercial system, I have re-optimized it, and I teach my students to do the same job. So what would you think if you take any trading system and somebody makes just, let's say, for example, a net profit of whatever. Let's say they make 7.5 grand. I'm going to just write here any figure with whatever risk level. Let's say that the risk level is the same, and there comes another person, and on the same trading system, same pair, same historical data, everything the same, they make 15 grand. Just in back test, and then in the future, the probability is also that you make double. And if you do it system after system, and you add this up, in the end, you understand there's so much money to be left in the optimization that you put the emphasis there, right? Many people have the emphasis on the coding, on the trading rules. This is a very early stage of trading, and I understand that. I've been there. But the big money is not really in that. The big money is in raising this and not leaving the money on the table because you're optimizing the wrong way. The other discussion, which is very heavy in the literature and all over the place, it's about what is a robust setting? What is a robust set of parameters? A set is basically the magic number, I call it, or the magic code that, let me show you the next slide so you understand what I'm talking about, and we get back here. Basically, you have two parts. You have the trading system, you have the log, and the other part is the settings. And the settings are crucial because you may have an incredible log, but if you don't have the numbers, so to say, the 12 magic numbers, the 11 magic numbers now for my trading system that I give out for free. Trading system is great in the pendrive, but it's not going to make you the big money. So you really need to learn optimization. You need to become a tweaker, a master tweaker, and you need to understand that it's both things. You need the log and you need the code. You need the key, whatever in this form, in this case it's in form of a code, And this code is the 11 parameters. This code here is the 11 magic numbers, so to say. I shouldn't use the word magic number because it has another meaning in MetaTrader, but this is your magical code right now. This is the default parameters of these trading systems, which is not great. We will see that now. And you need to know how to tweak it and change these 11 numbers in your favor. And generally, when you start working on this, and it's fun actually, you double, minimally you will double the net profit minimally. Many times you will make 300%, 400%, 500% of what it had originally. And these people pre-optimized. I mean, every programmer before they give out, or before we give out a trading system, we will give it out with good parameters. So can you imagine that even after people they found a good set of parameters, there is much better sets to be found. This is very difficult to understand for people. Then it's very important that this password or a number of array of numbers that it covers as many possible different market conditions as you may imagine. You know, you should be covering trending markets. You should be covering breaking out markets. You should be covering ranging markets. You should be covering high volatility markets. You should be covering low volatility markets. And in all of them, make a robust earning. And this is part of what we teach, is how to find this kind of parameters that will get you further. It's not a warranty, but that you have more chances in the future. Okay. So the question here is like we have two parts. We have the trading system and we have the parameters. And that's the perfect match, the perfect combination, the marriage between both, and it should be so good that it adapts the system to the different markets. Okay, and this is very, very, very difficult to respond. There's a lot of literature on that, not necessarily saying a lot of truths in many aspects. And I've spent a lot of time investigating on how to find parameters that have more chances in the future to make money than other set of parameters that have less chances. So that's the main reason for optimization. We're trying to find something that will bring us to trade system at least 3-6 months, at least making money. I would say that the minimum should be 3 months, which is not so great because it takes a lot of work to find parameters. And if you have a very good trading system, you can be very lucky and let it trade 1-2 years without changes. Is that clear now? I mean, why it's so important to optimize? Is it clear for everybody? The points here in the slide? Yeah? Okay. If you don't have the clarity on that, it's very, yeah, exactly. You need to be really radical on this, and we are very, very, I mean, very precise on optimization. We cannot say that the trading system is less important than the set. Once we talk about the log, we cannot say the trading system is not important. The only important thing is the parameters, and we cannot say the opposite. We cannot say the parameters is everything and the trading system is not so important. I would say it's 50-50. Sometimes I would say it's 60 in favor of the settings and 40 in favor of the trading system. If I have to choose, I choose optimization over code. Okay? If I have to choose, if I have no time, I prefer to spend my time in optimizing than in changing the rules of the trading system. Because my experience has told me that I will make more money faster if I spend my time in optimization than in changing code. Not because I'm not coding, because I have coders that code for me from one day to the other. It's just a phone call. It's very fast. But because there's bigger money in this side. But it's not very clearly 60-40 or 70-30. It depends. Regularly, it's 50-50. Okay? So we need to find the right settings. So what is manual optimization? Manual optimization, I don't know if you remember the Rubik Cube. It was a toy, I think in the 80s. It was developed by an Hungarian, if I don't Yeah, well, it's a cube just of, as you can see, there's a lot of Rubik cubes here, and the game consisted. You needed to put all the sides properly, like in the right color, like like the green side should be all green, the red side should be all red, and of course it has 6 sides like every cube. So it was very difficult, and there was only one algorithm actually to get to the solution very fast. And once you memorize this algorithm, it was very fast to get there. Otherwise, there were zillions, quadrillions of combinations, and you will never arrive to put all the 6 faces with the right color. And it was very popular at the time. And it's very, very similar to really what we are doing in optimization. We're trying to get, in this case, the cube would have 6 parameters. It would be like a robot of 6 parameters. It's very difficult that you imagine a trading system with 11 dimensions, right? Because the human mind cannot imagine a space that has 11 dimensions, right? You can imagine something that is 3-dimensional. That's quite easy, right? But if I tell you, imagine a cube which is 4-dimensional, you'll have problems, right? So that's why we use the optimization theory. But the thing is that we just make a parallelism here, which is quite interesting. We will try just to get one side right, okay? Let's say, let's get the green side right. Once we have the green side right, let's go to the yellow side. Of course, when we start moving the yellow side, we may move something in the green side, but we keep moving the yellow side till we find an optimum, and then we go to the orange side and we'll do the same, and like this in a concrete sequence in order to find an optimum. And that's what we call the manual optimization process, because it's done manually. And the concrete algo that we are using, it's called the Hill Climbing algorithm, which I'm going to explain now, and it brings to very, very good results, which are tradable, which are found very quickly, which takes in our robot, I would say 20-25 minutes if you're fast. If you are a newbie, it will take you 1 hour, but it's not much time really to get in a new pair in 1 hour to a result that you can put in the market and trade. Okay, so the thing is that we have to find in this one side a maximum, but the question is, what is a maximum? Because people think a maximum is what makes most money, and that's not true. Well, it's a maximum in net profit, but it's not the best maximum for trading. Okay, and we will see that today as well. So we'll find a maximum with certain characteristics, and we will move from one parameter to one parameter. This will look here like this. We will start, for example, we make it very simple. We start just in the sequence the parameters were done, and we say, let's go from top to bottom. And we decide on the sequence from top to bottom. We'll first optimize the stop loss, which is one face of the cube, right? The orange face, for example, to keep the parallelism, the metaphor of the Rubik cube. Then we will optimize the take profit. This will be the yellow side, the yellow face. Then the moving average will be the blue face. The distance will be the pink face. Well, there was no pink in the Rubik cube, but whatever. And the Williams percentage will be the whatever other color, the red face, and like this. And we will find an optimum here, an optimum here, an optimum here. And once we find an optimum here, we will just lock the optimum and go to the next parameter. And we have found empirically that in the majority of the trading systems, the results are quite good and they're tradable. It's not just an exercise because we have nothing better to do or we don't know how the genetic algorithm works. This is just the ground basement that we need to do later on a better genetic algorithm search because we need to understand first this algo before we can understand the genetic algorithm properly. So I always use this example. As you know, I come from Spain. So a good orange, when it has real good juice, you will need 2 to 3 squeezes. If the orange is bad, with 1 squeeze you are done. After that, there is nothing else, right? So when there's a season for oranges, you can try that. I'm talking about manual squeezing. And the truth is that majority of the programmers, they do this. They squeeze their trading systems like this, and it's no joke. I mean it. I mean it literally. They pretend to get the best of the trading systems just by a quick squeeze with the hand. They get some parameters, they put it to the market, and very often they are lucky enough that these parameters trade okay, but they're leaving so much juice in the trading system. I'm really amazed, and they're not even aware about it. I can take any trading system from anybody, and really I always win the challenge. And they give me a set of parameters, and I tell them, just give me a week. Sometimes I do it just in one evening, right? And I will double the results. Okay, and how do we do it? This is the right way. The right way is we need to get a squeezing mechanism, a squeezing method, and we need to do it 3 times, ideally 2 times, more than one at least, the squeeze. And of course, the second time there is less juice, obviously, and the third time hardly no juice. Sometimes we don't even do the third time. Okay, but the manual optimization is a way to start to squeeze the orange, meaning the trading system. Okay, what is the orange here in this figure, in this picture? This is the trading system, and the juice is the money. The money that trading system can make in the market is the juice here. And so this is the trading system, okay, and this is the money, and you need to have a good optimization method to get the most out of your trading systems. So trading systems you can find all over the place. I mean, there's thousands in the internet. Good optimizers you hardly find. There's none. Okay. And I'm going to be arrogant there. If they didn't do our education, they will be quite bad optimizers. That's the truth. So this is, I want you to keep this picture because it's very graphical on what a bad optimization is and what a good optimization is, and manual optimization as a first step. And here we go. You need to follow these rules. It's very important that you understand that where you start is going to affect a lot your end result. If you start on the parameter whatever, let's say the stop loss here, I have many choices. I could be starting here in this robot on the stop loss, right? I could start here, or I could decide to start on the Williams percentage and go from here to bottom, or I could decide to do the total opposite, and I could decide to start with the hour. I will first lock the hour, and then I will just go upwards in the complete opposite direction. And I've done a lot of extensive research. I've done over 10,000 optimizations researching this because we found very early on that manual optimization gave very quick results. And as we do many trading systems, we have a lab, we want to test them very quickly. We don't have the time and the patience to see if there is money in this trading system. So we just do, first of all, manual optimization with the algo I'm going to show you now, with the hill climbing method. And we need to know very quickly if there is money. So we did these tests, and we found out that it was both the best choices were normally, and it's funny enough, it's in the slide, I'm going to show you right after one more time, but we found out in the order that normally the parameters are named by the programmer. It's funny, but it works very well, and the reverse order works also very, very well. What did worse in our tests was the random order. The random order brought very, very bad result. That means that you shouldn't start with a take profit and then jump to the Williams stop level and then jump to stop loss, because this will give you very bad results, both for trading and also mathematically. There should be a logic, and it works very, very well. This one or this one, and I'm going to give you another choice later on. I'm going to give you 3 choices, and it's very, very interesting because you need to remember from the webinar, from the course before today, that there is not just one single solution. There is at least, in this case, 11 solutions. So if you take different routes, you will get to different results, and you should trade both results. If you are optimizing from top to bottom and you're optimizing from bottom to top, you will get 2 different sets of parameters, completely contradictory, hopefully, and both should be traded and compared. And maybe you should even trade them both together in the live account if they're both quite okay. Just reduce the risk to 50% down, okay? But this is another topic, not from this webinar, okay? In case they trade both well, and I would start to trade in demo 1 or 2 weeks, not longer, 10 trades, up from 8 to 10 trades. And after that, you see if it's trading okay, if it's similar to the back test, you can go to their live account. You should go to the live account in order to make also the experience of trading, because if you're trading with demo, you never have a feeling, actually. So it's very important that you keep always the same order. You cannot start in one order and say, okay, I do from top to bottom, and the next time I do from bottom to top. This brings very bad results. So whatever you do, whatever sequence you choose, and you can experiment as much as you want. You have 31 pairs, you have 11 parameters. You can go crazy on this exercise, actually. And it's part of our course in our training lab. We do this with this robot. Okay, we do the practicals with this robot. And the important thing here is you need to keep the sequence. Okay, whatever sequence it was, not the random one, you need to keep always the same sequence. The literature, there's many books on this, says that you should start with a ratio. I disagree. It brings good results, but it's not the only way. What they recommend is that you start with a stop loss, which makes sense, actually, and then you go to the take profit, and you do this one after the other, several squeezes, okay, and then you do the rest. It's the third option I can give you, and it works, but the other two work the same. This doesn't bring necessarily better results. It just brings different results. So you can start stop loss take profit, stop loss take profit, stop loss take profit, till the third squeeze there is no difference. We will do this today, actually. We can do this one. And then you do the entry signals, exit, and filter, hourly filter, whatever. You see, that is what the books recommend when doing this hill climbing optimization, but I don't agree fully on that, because empirically we have found that other ways give same amount of money. Okay, it's very interesting, as I told you before, that the declared order of parameters by the programmer normally makes sense. It's funny. So they put the parameters in an order. That's why they look like this in the code, in the visible part of the code. And I would say just follow it. It always brings good results. I haven't seen any EA that it didn't bring good results. Normally, just follow the order of parameters and don't overcomplicate it. Okay. Also, the opposite, as I said before, will bring very from bottom to top, will bring very good results and good settings, good money. Okay. So we have now 3 possibilities. We can do, as the literature says, we can go stop loss TP, take profit, stop loss take profit, stop loss take profit 3 times. Then entry signals, exit signals, filters, position management in this order, which is what the books say, but I don't fully agree, but it brings okay results. And just follow the order of the parameters. Don't overcomplicate. You will get great settings. Or the opposite order. Just go from bottom to top. 3 choices to squeeze the orange. Okay. So normally, when you look for a maximum, of course you want to have more money, right? You were looking for something that makes better money. But it's not the only consideration you have. You need to watch a lot more things. And I'm running very late because I'm already talking 50 minutes and we didn't even get started with the optimization. But you need to know this theory. And if I'm short of time, what I'm going to do is just spend more time on Wednesday. But the trend system is very complicated to optimize, extremely complicated. And I should spend more time in optimization on Wednesday than today, actually. The scalping system is quite easy, as any scalping system. They're very easy to optimize. Okay, so we want to check a different set of things. Not only that it makes the most money, we want also that it's surrounded by a stable area. How does it look like? Let's say, for example, I would just turn off the trend system and I will just check. You can do this at home and just follow me as I do this. And you have these parameters from factory. In case you don't have these parameters exactly, just reset them and just put the lot size down to 0.13. Start your backtest with $10,000, not pounds, which I can explain in another lecture, but just put it in dollars and just optimize for balance, okay? Like this, it should be like this. And I started with 0.13. I will explain now why. And I'm going to do just my first benchmark, or which I call benchmark because it's the starting point. And I'm going to do just the first back test. I did it on the euro dollar. I started in 2007 here, and I did till today, or what 2 days ago. Okay. And I get something like this, which looks not very good. It's profitable, but it does look especially great since 2012. And I put it in 0.13 because I was watching this. The people who were at the lecture in One Mortgage will remember I cannot risk more than 2%. So this is 1.95%, and I'm risking here on average 0.52%, my average risk, because I need to divide every time divided by 10,000. So instead of dividing by 10,000 and calculating percentage, which is very complicated, I know that 10,000 is 100 times 100. That's the same as 10,000, right? So what I do is I just move the comma twice, and I have percentages, and I just trade it with fixed lot size. So I know this is 1.95%. I know this is 0.52% because I just move the comma twice, and I know that my drawdown is 19.08%, and there's 4 magical figures for the new guys here that you need to memorize, and these 4 magical figures are, let me give them to you. I have them here in a slide. Here, you shouldn't risk more than 2% per trade on maximum risk, and on average 1%. On a streak of losing trades, never more than 15%. On the drawdown, never more than 23%. The reasons for that, you need to come in on the 15th of January to One Mortgage in 2016, and you will understand why these figures exist. If you need to just have safety nets, and you cannot overtrade. So that's the maximum you will accept in this back test. Okay, just memorize 23, 15, 2, and 1, and that's it for the moment. If you're new, if you're old, you should know this by heart already, because I explain it every time. And if you have questions, just ask them now. Okay, so that's what I did. That's why I put 0.13, so I don't make here more than 2%. This is less than 23. 5 is less than 15, and it makes very little money. It makes only 33% over 8 years, which is for me absolutely unacceptable. I'm not trading for this amount of money. I'm not trading to get a 5% per year, 4% per year. For that, I stay at home, or I buy Kiwi bonds, or New Zealand bonds, or I do something else. But to trade for 4%, 5% is absolutely not interesting. So we will see how we can improve that. Okay, so this is the first part of the process. You do the first back test. You should get exactly or very similar to what I have on the euro dollar. If you are not following now and repeating what I'm doing, once we have the video uploaded next week, just do it calmly at home. You really need to dominate this part of the process. You need to do it blindly, because this is the beginning of optimization with robots. Backtest is bad, the future is going to be even worse. So now we have different choices. As I told you, I put M5 and I put a spread of 1.7, which is far more expensive than what you will get in AxiTrader, because I'm calculating all the possible slippages. I'm calculating that the trade is going to enter in a bad moment with news, and I'm calculating 0.7 more spread than usual. Okay, how I got this figure I cannot explain now, but just put 1.7 or 17, which corresponds to a spread of 1.7. So the first thing I'm going to do in the Hill Climbing Algo is I'm going to take the first parameter and I'm going to optimize it from a sensible stop loss, which is 10 points. To put the stop loss at 2 pips, some students do, makes absolutely no sense. It's going to jump every minute. They say, yeah, but in optimization, it gives good results. I know that if you put 2 pips, you'll get incredible results. Okay, it was 21, Dave, for the cable. If you remember, we did in London, we did the cable, and it's very, very good. Dave is telling me that I said in London 21, 2.1, but we were trading the cable in London, and today I'm trading the euro-dollar, just for a change, not to trade always the same. By the way, the robot works better on the cable. The scalper works better on the cable. The trend system is better, much, much better on the euro-dollar. But you need to trade euro-dollar anyway, because it's a very important pair. So we start here with 10 points, 10 pips, right? And we'll put the stop loss from 10 to 120. If you're new here, I guess the new guys are a bit lost. I would like to get a bit of feedback from the new guys here. A lot of new people here: Kareem, Anthony, Ali, Gary. There's a lot of new names here. Please tell me how you're doing, because the older guys, they saw me in London, and I don't know if Rohit, I think you were also in the lecture. Please write me some feedback here in the chat how you're doing, okay? If it's more or less understandable, or it sounds Chinese or whatever. Yeah, okay, so this is 10 to 120, okay? And what I do basically is I click here on optimization, and I let MetaTrader do all 120 back tests here. Just send me some feedback, guys. I just want to know how you're doing over there. Okay, and it's very interesting, the first results. You see, with a stop loss of 10 points, we make only 14%, which is far worse. And we need to always to compare it with our last benchmark. We need to remember this figure. We were doing 33%, and we want to put this robot at least, I need to make 8% per year. That's the minimum in a back test. So if we have here 9 years times 8%, I need to get it to 72%. It needs to earn at least 7,200. I need to double, more than double, 33% to 72%. I need to double the earnings of the training system. And I can order it here by profit just by clicking here twice. What I do normally is I go here, right mouse click, mouse button, and I take off here this auto arrange. It's very annoying, this auto arrange, and I like to arrange it the way I see everything very clearly. And what I want to see here is the parameters. That's the main thing. This percentage of drawdown, I don't care, because I calculate the drawdown myself in absolute value, and I do like this. Okay, that's how I work. That's my little neurotic things how I need to work, but you don't need to copy everything. And I see here the euro-dollar clearly, so I remember. Now I don't see here the euro-dollar, so I put here the euro-dollar up here. So in case I forgot what pair I'm trying to optimize. Yes, Kareem, I'm setting up the robot, exactly. Manually, I'm doing tweaks on the robot, on the parameters, moving the stop loss first, moving the take profit to get something that I can trade. Because I don't want to trade for 3% per year. Actually, I want to trade for a robot that makes 20% per year, just on one pair. There's plenty of those. Even this one, I can put it in 20%, not in the 20 minutes that are missing of the lecture, but I can do it very easily in half an hour. So right now, we got a parameter which is quite interesting, which is 37. The first thing in the slide was that you should be surrounded here by a robust area. You see, that's the optimum now in money. That's the first optimum. That's the second optimum. And it's pretty much on a plateau. You see it? It's not good when the parameter is like this is the optimum and the next parameter is here down a cliff, because that means that if there is a slight change in the market, imagine this makes it 40%, right? This parameter, the stop loss 37, and the stop loss 38 would make you 20%. That's really not recommendable. First thing you need to watch is, am I close to a cliff? And you're not. You're well surrounded here, sorry. You're well surrounded here. You see that? So that's acceptable. 37 is an acceptable parameter. This one is also well surrounded. It's a good parameter. And this one is also well surrounded, but makes far less money. It only makes 28%. But one of these three should be the choice, depending on the first factor of the slide, the first rule, which is you shouldn't be close to a cliff. Okay? You should be surrounded by a stable area. You see that? Sorry, I'm crossing that out, and it shouldn't be. It should be underlined. Okay, so first thing, you should be surrounded by a stable area. You should also check that you have a minimum in the drawdown. You want a parameter that not only maximizes the money, but as well minimizes the drawdown. You don't see that here. Here you see the hill, right? You're climbing the hill. That's why it's called hill climbing algorithm, right? You're going up in net profit. Hill climbing, climbing down, climbing up the hill, climbing down the hill. And it's very interesting that from 10 to 37 you make more money. From 37 to whatever is here, this parameter, you're making far less money. Very interesting, right? A stop loss in scalping in the Asian session, because this is a robot right now, it's trading at 22 p.m. London time. It means you shouldn't have the parameter, the stop loss between 38 and 50. This is an area where it's down climbing. This is an area where it's hill climbing, so to say, going up. This is an interesting area. This is a bad area, and this could be also considered. But the interesting part here is, in the stop loss, it's very clear that I may need to do 2 more webinars, guys, because there's so much info on this. So, and we are already exactly at 1 hour. We are at 8:30 London time. So the thing is that you have here a stop loss, which is 102. You're earning the same than here, 37. And you may consider, well, 102 makes more money. Let's order this by earnings. And you see here that 100 and 30. You didn't hear me? Yes, you hear me? Sound is back? Okay. With the audio? Hello? Yes, okay. Seems like Olga's telling me the audio has some issues. Okay, the important part is that between these two, what is very, very important, you need to watch very carefully. You should also be minimizing the drawdown. And if you watch the drawdown very precisely here, one of the settings, if you choose a stop loss of 32, your drawdown is only 6% over 9 years. Okay, Paul says that the audio is okay. I'm happy. And the stop loss here of 102 has a drawdown of 12%, earning the same amount of money. Which one is the better choice now? Obviously, this one is the better choice. Also, because if you exit with 32, you can also put the lot size bigger. Okay, so this is the first reason, and you should follow exactly what I'm doing, because majority of you guys have the robot, right? And you should be just choosing 32 right now. How do you do that? You just double click on this line, click with the left mouse button, click, and if you watch here, you just got 32. Remember, it was 120, 150, which is crazy. How people trade scalping with their stop loss on 150 makes no sense, right? So far away. Now 32 makes sense, right? Okay, and you need to just have visual abilities. Remember this curve, yeah? Remember these figures, 33%, 19% drawdown, right? The risk level, even this percentage of winning trades, 74% of the trades are winning, yeah? Just remember, if not, write it down. I wouldn't recommend you start writing down everything. You could even make a screenshot, but if you become too pedantic about this process, you will never come forward, you'll never be fast about it. So just try to remember the figures as far as you can, okay? And just launch it again, and it's gonna be now the backtest with 32 pips, and that's the beauty of MetaTrader. This is ultra fast in MetaTrader. If you do this in other platforms, Remember how the curve was before? Wow, what a change, right? It's much more neat, it's much more straight, right? The curve, and the drawdown passed from 19% to 6%. But you know what happened? This is even more important. This is what happened. Because I reduced the stop loss, now I'm only risking per trade 0.42%, right? And on average, I'm only risking here 0.36%. And now I can do what I call renormalize. This can become a loss of 2%, right? And this here can become a loss of 1%. That means I can multiply by 3, this one. 0.3 times 3 is 1. And I can multiply by 5, this one. So I take the smallest one of both, and I can multiply everything by 3. Because I can risk easily 1% here and 1.2% on the maximal side, and I would be trading okay. I would be not dying. If on a $10,000 account I lose every time $36, that's 2 lunches, right? That's not a big figure. I can really risk $36, and I can risk $100 on 10,000, right? Do you follow that, the new guys? I'm more concerned about the new people. Yeah, so I just can easily increase my lot size from 0.13 multiplied by 3, it's 0.39. I'm very fast. Do it with the calculator. I do it with the head. So 0.13 times 3 is 0.39. 13 times 2 is 26. 13 plus 13, 26 plus 13, 39. 0.39, and I renormalize this back test, and you will see that the most important choice in optimization is the stop loss. The graph is the same. I'm only making now, with this little change, I'm already making 170% profit. 170% profit in 9 years means I'm already making 13% per year on average, which is just one little change, which was changing the stop loss. For me, this is a very ugly curve still, but there is meat here, right? I can trade, I can earn in one single robot 13% per year, and if I take 11 players, I can be making 100% per year, and this is attractive for me, appealing for me. If I'm not gonna make at least 30%, yeah, exactly. It starts to look interesting. I mean, the robot has a lot of potential, and I just only moved one parameter. I didn't prepare the lecture. I never prepare the parameters, so now it starts to look nice. What did I do now? I just fixed the first phase of the Rubik Cube, just so you remember. I just went here, and I just was tweaking, and I let the orange phase set up, which was with the stop loss of 32. And I just fix it, and I go to the next page, because 32 was here, right? 37 was quite good, but 32 is closer. I chose 32. You could have chosen 37. It's not a mistake. There is not a unique solution. You don't need to follow the guru, and if it says 32, everybody chooses 32. You could have chosen 37. It's fair enough. You could have chosen this one as well, and you could have even chosen this one, or you could have chosen this one, and it would be an okay choice. Probably 32 and 37 would be smarter choices. But there is not just a unique solution for this, okay? You should always remember that. There is not just the solution. There is a multiple possibilities, multiple set of solutions. And now we go to the next parameter, and I will do just the hill climbing, just going from up down, the most simple one. And I'm going to choose here the take profit, and I can have a robot that just earns 1 pip, which is ridiculous, right? And I'm just going to start here with 4 pips. Just this is very little scalping, but whatever. We'll see if it makes money, and I will make it more trendy, and I will go for 90 pips. Even if the robot from factory would be a scalper, I don't care, because if I need to follow the definition of scalping, I shouldn't look for more than 10, 11, 12 pips. And that's absurd. I don't care what the basic trading system is about. If it's a scalper, I sometimes took a scalper and I optimized it to become a trend system. And I don't care. I care about making money. I don't care about being pedantic and following rules. Okay, what is important is to make the most money you can, to squeeze the orange as much as you can. Okay, and here we go for 190, so it will make all the back tests for take profit 4, take profit 5, take profit 6. If you follow at home, just do the same. You set up already 32 there, and just follow the steps I'm doing here. If not, follow the video later. And you can go here, you can check if in the log it said optimization started. If it did, you're fine, you're set up. If not, there's a problem in the code, then something is wrong. Okay, and the new benchmark is 117%. You follow, and I'm gonna beat on that one. I'm gonna try to make this 150%, 130%. You know, $13,000 over 9 years, double the account. It more than doubled. Let's try to triple the account. Okay, that's the game. The game is make more money, reducing the risk, reducing everything which is risk factors. Okay, and make more and more money every time. And here we go. We have already, I need to remember this figure, 170%, and I need to remember the drawdown is 90%. It's very ugly, 90%. Why? Because 19% is very close to the magic number of 23%, and this is very, very dramatic. And if you guys were in one more gate, you need to come on the 15th of January and understand that. Later I'm going to give you the link. And it's very, very important you're far away from 23%. You cannot trade risking 23% of the account because the next thing is death. Okay, so this continues while we talk. It takes minutes. It takes just, it only was optimizing 1 minute. It's taking into account 650,000 candles. Every M5 candle in the last 9 years is being interviewed, so to say, and they're asking, shall I go into the market? Yes, no. Shall I go into the market? Yes, no. 650,000 times multiplied by 120 parameters. It's amazing, right? And this is being done in record time. Okay, and this computer where I lecture is usually not the fastest one in our office. So here we go. We can order again by profit, and here we go. The main goal now for me is reduce the drawdown. I can play here a bit more because I have here space till 2%, but this will not change till I go back to the stop loss, right? Because this is going to be affected the risk by the stop loss. And what I'm going to try now, my goal here, and this is something you need to practice and practice and practice. Hopefully you come to our education because you will practice it like crazy. And I need to reduce this now. Why? Because it's experience. I mean, what is the most important step to be done now? And here, sorry, I'm trying to change here. We have very good news because we reduced from 19% to 16% the drawdown. As you can see here, right now we have a drawdown of 16%. And you say it's only 3%. No, it's exponential. 16% drawdown compared to 9% drawdown is much, much better. And 123% is slightly better compared to 117%. You say it's 6% in 9 years, which is a slight improvement, but I improve in both sides. I'm improving in earnings, you see. I earn more, and I reduce the risk. And that's what I'm looking for all the time. I would like to scroll down. I would like to scroll down here and see if there is some other drawdown which is dramatically inferior. I'm going to order one more time here. So it's not only about hill climbing. Of course, the area we should be looking at is here. It makes no sense to take profits because it's a scalping system. That's what's telling me the graph, right? It's telling me you should be looking something in between. You click here and you check here, something in between 17 pips and 27 pips. This makes sense, even if you want something in between 12 and 27 or even 28. This makes sense. It makes no sense to go for 39 pips in this case right now, and it makes no sense to go for 87 pips. You earn less than 1/4. Here you earn only 50%. You see, $5,000. And here you are earning 123%. So it makes no sense to look further than 30 pips take profit, right? Which makes sense. It's a scalper, right? So I can either order here by take profit, you see. I just clicked here. You click here twice. You see that? Or once. And you order by the parameter. So I would be starting, if I make the study in this case just only by the values, I would be starting something in between 12 and 30, take profit. So that's the area of study, which should be, I can mark it in blue with just the control key. This is my area of interest. Okay? This is another way you can study. That's the stable area. Okay, so it's not only just the maximum, again, it's the maximum plus less risk and plus higher profit factor will get there as well. So if I go for higher profit factor, I go here. In this blue area, the highest profit factor, which I will explain in another lecture, it's very, very important, the profit factor in optimization more concretely. I would go for this one. If I'm looking for expectancy, what I earn every time I go to the market, I'm looking for this one as well. Because here I make $6 every time I go into the market, while here I only make $5, right? The risk is the same. You see 16% and 16%, while 16.99 and 16.77, it's practically the same risk. But the earnings here is 20% more over 9 years, and 20% more over 9 years is 2% every year. It's a lot of money. If you're trading a big account, it's a lot of money. So it's pretty much this one, you see. But I'm introducing new factors to choose from. And this was the point here in the slide. You need to check on all these rules, even more than those. That's just only the introduction, okay? So you need to check that it's stable, that the drawdown is minimal, that the profit factor is very high, that you have a good ratio, that the relationship between stop loss and take profit is good, that it makes sense, and that you earn good money every time you go into the market, the highest expected payoff, right? So this looks quite sensible, and I'm going to choose it. It was 123, line number 14, parameter test number 14, the plus 14, which corresponds to a take profit of 18 points, 18 pips. Double click. Once I do double click, 18 is taken, you see here. And 32 is the stop loss. And here we go. We have here the graph, and it looks better and better and better every time. It's called the ruggedness of the curve. I'm going to explain it later. It's a complete webinar. It's a term from topographics. I don't know if some engineers here. How rugged is the curve? And this curve is quite rugged. It's not nice. That means that you don't sleep well in the night because the capital is very shaky. You see that? So this is measured basically by the profit factor, but I don't want to complicate it, overcomplicate it today. This is a topic from another lecture, but the ruggedness is getting better and better. It's less and less shaky, the curve. Okay? So this is the first choice, the first thing you need to watch, the visual part, and then the figures. The figures are getting there. Now we are at 60% drawdown. We're already at 123% divided by 9 years. You can have always a calculator. This you can use. And that's 13.6% on average per year. It starts to get really better. The sound is gone. Paul Pierre, sound is there. It's okay. Sound is there, Paul Pierre. You should be hearing me. Okay, I'm going to be just 5 minutes more, and I'm going to continue optimizing the next. You can hear me now. Okay, yeah, seemed like it was just very shortly out the sound not working. Okay, now I fixed stop loss and take profit, and now I could do one more squeeze following the books. I could do again stop loss. You understand? One more time. because now I have a new take profit, you see? And then I could squeeze one more time take profit, and then stop loss for the little juice, the last drops, you see, the third squeeze, and then I could go back to take profit. That's choice number one. I'm not going to do that because I'm short of time, and because that's just one choice. Okay, we have the other choice just to continue with the sequence of parameters, and that's a moving average, which is an advanced moving average. You can look it up in the internet. Just put SMMA moving average, and it will tell you the formula. I don't want to enter into it. It's just a bit more complex moving average. It's nothing else. And a moving average of 1 makes no sense, right? Because it's not an average. To have an average, you need at least 2 figures to make the average of 2 figures. So I will start with 2, and I could put 120, and it doesn't matter. The point is, if you don't know the robot, just put a very big range. And that's what we have here in the slide. There is just recommendations that if you don't know really the robot, you just need to put a very wide range there, and that's what we wrote here. And so you get to know it. Don't worry about it. It's better you put a very wide range on it, and that way you can do your testing here, and it's doing nothing. It means that the moving average, it's just a static value, and it only starts to make something after a period of 14. So next time I'm not going to put 2, I'm going to start at 14, because the rest is a constant, right? It's all the same profits, 26.38%. Next time I'm going to start at 13 or at 14. Okay, so we see that it really moves a lot. It makes now 40% profits, which is nothing compared to what we had before. It's 1/3, and this is going to change a lot because it's the entry signal. Okay, and I think this is the last parameter I'm going to touch today. I recommend you continue touching. I'm going to continue next Wednesday on this same robot, and if you don't have the link, I'm going to put it here. Also to tell you that we have a new link on the January event. We have a lot of topics now to mention, but we have the January event. We have the new link. So if you really want to avail yourself, you got an email today by Olga of the early birds. She can do that for you. She can do but there will be only 30 early birds. You sit at the front, and we give you some free stuff, like indicators and stuff. If you want to repeat the event, you are more than welcome. Or if you are just too lazy to do the registration, just drop an email to Olga and she will do that for you. Okay, no problem. The other thing we have is this huge event. My friend Simon is organizing it. It's a great thing. It's 12 hours of trading. I know many guys are working. It's for free, and it's called Round the Clock Trader. And you can join us, and it's going to be 12 hours. I'm going to be the last one because they gave me to choose between. I'm going to be at 8 p.m. I'm not written here, but I'm really in the link there, and you have the link for that as well. And there's a lot of lectures. Just choose the ones you like, and you can register here on Thursday. I'm going to be lecturing at 8 p.m. Okay, London time. And I'm going to meet you there. And the other thing is going to be next Wednesday. I'm going to continue with the lecture of today about Hill Climbing Algo, and I'm going to probably add another Hill Climbing Algo lecture because I'm not going to be finished with this robot till end of Wednesday, and we need to optimize the trend robot as well. So that we'll do probably next week. So there's a lot of appointments together. Hope you all come. Okay, here we go. We order again by profit. Okay, I just let it be there for a while, and we first watch what is the stable area. This is the stable area, right? You could even take a bigger stable area. It could be this one, okay? But it would make no sense to choose parameters here to the left. It's not stabilized yet, okay? And we could take this maximum, check. It's quite stable. It's surrounded by stable values. This is also surrounded by stable values. It doesn't mean, what is stable? Something that is not close to a cliff, right? Okay, if it goes a bit lower, it's okay. The difference between earning 133% and 132% is 1% over 9 years. My goodness, that's not a big difference, right? You need to put it in perspective that we are optimizing 9 years. So here we are making 137%, and here we are making 131%. That's not a cliff, right? That's 6% difference over 9 years. That's 0.75% over 9 years. That's not a big difference. So we can already stop it. How is the sound? And we're having sound problems here. And here we go. We have very good news. We were earning 123% with a 16% drawdown. You see that? And now we are earning 137% with a 15% drawdown. And my eyes go here immediately. Or here. Because I'm reducing the risk, right? So now it's not an easy choice. I would probably take this one, even if I earn less, because I have a higher profit factor. And I have a much higher, you see that? Between these two, this earns more, but this one has a much higher, no, the profit factor is the same. Wow. Then, being like that, I would go for this one. Okay, I thought the profit factor was, here the profit factor is better. The other thing I can do, which we will see next Wednesday, I can order by profit factor, right? And just choose the best one on profit factor that makes the most money, which would be this one. So there is many choices here because it's a very robust area. The moving average lets me choose very many different ways, and I should dedicate time, because if I only go by profit, I just choose this one. And it's probably not the best one. And in this case, maybe I want just to improve the roughness of the curve, and I may go for this one. Okay, I'm going to choose this one real quick, and I'm going to conclude the webinar for today. See how the roughness is much better because I chose by profit factor. And the other thing I did, it was not consciously, I improved the last 2 years. Remember that since 2012 the curve was very bad, and now the curve is quite good till August 2015. So the system now is trading well in very many different market conditions, especially in the last 2 years. So that's the last part of the theory, that you have the slide that you can practice at home. Please practice at home. If you don't have the EA, just open a trading account, of course trade, and you get the EA for free. What you need to look at home is the last 12 months should look good. The last 6 months should look good because these are the months that are closest to the market today. You should make at least 8% per annum or discard it. If after optimizing manually a trading system from top to bottom 3 times, you squeeze, and you don't make 8% per year, the trading system is no good, period. Okay? You need to renormalize on the go. You need to change the lot size on the go. Okay? When you manage to change the stop loss, everything will change dramatically. Okay? And there is 3 ways, I will explain this next time more in detail, that the set can perform. The set of parameters, you can have a line. It can be, I just draw it like this. You can have it linear, like this, or it can be convex, like this, or it can be concave, like this. And the best one is when it's linear, all over the period. Okay? And that's all. That's all for today. Okay? We are finishing. If you want to know more, you know that we do the education in Madrid. And in the middle of February, we need to meet still. There's many people here in this room that want to do the education. I will arrange the meeting only next week, that we have the conference call, all of us. If you want to be in contact with us, here we are in Skype. You can also write us to Olga. We don't reply immediately. You should know it. And this is our training room in Madrid with the international group of students. We make some tapas from time to time in the evenings after trading. And here's where we do the trading. And we sit in front of the big screens here. Here's our servers here on the side. And we have around 15 machines, 15 high-speed computers, and we explain you how to make these computers out of the best parts inexpensively, so you can really optimize faster. And that's all. That's all for now. Sorry I had to speed up so much in the end, because there's so much information. And if you have a quick question, I can answer that one. And otherwise, we will finish, because it's quite late already. We did 1 hour and 30 minutes, and that's too much. Thanks very much, Paul Pierre. I hope that it was more clear. Thanks, Dave. Okay, guys, then if there's no questions, I'm going to close the room, and I meet you on Wednesday, 19:30 sharp, okay, London time. And that's it for today. Hope the new guys, you are not too lost. If there's some question for the new guys, just drop us a line and we will try to clarify. The videos will be up next week anyway. You can review the video at home. Okay, have a good time, and I meet you on Wednesday. Bye-bye.